fringe benefits. Just a note, I've disabled the microphone option. There is a chat box on the left-hand side. Please feel free to ask any questions at any time by typing in the chat box, and I will be happy to answer these at the end of the presentation. I'm sure everyone can learn from the questions asked. Right, grab a cup of coffee, sit back, relax, and let's get started. Understanding fringe benefits. Fringe benefits seem straightforward to the HR and payroll community, but do your employees and managers and line staff understand what they are and what they mean? It can get very confusing. So let's take a look. A fringe benefit is paid by the company on behalf of the employee, and according to SARS is a benefit received by the employee. It is not part of their remuneration, which means the employee doesn't see a cash value on their payslip. It is considered a hidden taxable value since most payslips exclude the fringe benefit breakdown on the payslip. They just show the fringe benefit section and then a total. It doesn't actually show the employees what each fringe benefit value actually is. There is normally a section for fringe benefits and then a total. To understand fringe benefits, let's understand what the word actually means. Firstly, the word benefit may be understood as an advantage or profit gained from something. For example, accommodation provided by your employer for the employee to use. I certainly wish I had a boss with a fancy holiday house available on Clifton Beach. I would be there every weekend. Secondly, the word benefit, the word fringe may be defined as being on the edge, a border, or not part of the main. So, consequently, a fringe benefit is to be understood as a benefit that an employee receives, but which does not form part of the employee's primary remuneration package, which is an employee's salary cash value. So let's have a look at a few administrative rules. When an employee receives certain fringe benefits, these need to be added to their remuneration package and taxed accordingly. Before looking at some fringe benefit examples, let us first turn our focus to the employer's obligations as prescribed under the Act, which means SARS's rules. So first, the employer must determine the cash value of the fringe benefit received by the employee. Secondly, the employer must add this cash value to the employee's remuneration. Accordingly, the employee may be obliged to pay tax on their benefit. And thirdly, on an annual basis, the employer must issue the employee with an IRP5 certificate. The nature and cash value of the fringe benefit must be clearly stated. If your IRP5 does not state your fringe benefits clearly, then I suggest you take that up with your employer. Right, let's have a look at some of the categories of fringe benefits. This is just an overview. There will be a more in-depth webinar going into some of these options. So look out for that invitation. Right, number one. When receiving an asset or gift at less than its value. This is best explained with an example, such as an employee who receives a long service award. Think of it this way. Wouldn't it be strange if an employee was expected to pay for his or her long service award? It certainly would be. For this reason, SARS recognizes that employees receive long service awards. And so, SARS have placed a cap, which is a limit, on the amount which may be regarded as a tax-free fringe benefit. The value is currently set at 5,000 Rand per annum. Please note, this particular fringe category can get rather involved, with several examples relating to movable assets and asset of no value being mentioned. But as I said, since this is an overview, those options will be discussed deeper in a future webinar. When an employee is granted personal use of an asset for private purposes, this includes a motor vehicle or a house. So that Clifton Beach, that's a whole different fringe benefit. The schedule states that the employee should be taxed according to the market-related value of such an asset. Please note that there are specific rules which give direction on how to calculate such a market-related value. This may also depend upon the type of ownership and usage rights of the asset. For more in-depth information regarding this calculation, you can consult the SARS tax guide or get hold of SARS. For number 3, we have use of a motor vehicle for private purposes. The employee is taxed according to his or her private use of the motor vehicle. The schedule lists several stringent guidelines relevant to calculating the value of the vehicle, the cost of the mileage, as well as the value to be added to the employee's salary. So they're quite strict on how that gets calculated. Should the calculation be incorrect, the employee is liable to pay in tax. So I would suggest you double check your calculations. Then we have meals and refreshments. An employee is taxed according to their when an employee receives meals at a reduced rate or for free, a taxable fringe benefit amount must be added to the employee's remuneration package. The taxable value is determined by calculating the difference between the value paid by the employer for such meals and the amount which the employee pays for such meals. For example, if the employer purchases meal vouchers from a caterer at, say, 20 Rand a meal, but only charges the employee 10 Rand a meal, then the taxable fringe benefit amount will be on the difference of the 10 Rand. In certain cases, exceptions to this rule may apply, particularly when dealing with the reason an employee receives meals, as well as the location where their meals are consumed. Accommodation. A large section of the schedule deals with accommodation fringe benefits. Whilst the detailed discussion of all aspects falls outside of the scope of this discussion, the bottom line is that when an employee benefits from reduced cost or free accommodation, a taxable amount must be added to the employee's remuneration package. The Clifton Beach House might be worth the pain of paying the benefit tax. Free or cheap services. When an employee benefits from the use of a company or supplier's goods or services, and which are determined to be received at an amount below the market value of such goods or services, then an amount needs to be added to the employee's remuneration package. For an example, if the employee and his or her children receive free school or tertiary education, then the taxable value of the fringe benefit is the cost of the education being received. So as much as they don't have to pay for the education, they need to pay tax on the benefit of getting that amount for free. Low or interest-free debt. When an employee receives a financial loan that is greater than 3,000 Rand and the interest rate levied on such a loan is less than the current SARS interest rate, then the taxable fringe benefit value must be determined. In this case, the difference between the interest rate charged and the current SARS interest rate must be treated as taxable income, which is to be added to the employee's remuneration package. So basically, if you've loaned more than 3,000 Rand to an employee and your interest rate that you're charging is lower than SARS's interest rate, the employee needs to pay tax on the difference. Please note that smaller loans of an incidental nature do not attract interest and are not regarded as a taxable fringe benefit either. Subsidies in respect of debt. When an employer pays an employee's debt, whilst also not requiring the need to recover the money paid to settle the debt, then the full amount of the debt is to be treated as taxable income and added to the employee's remuneration package. So basically, if your company pays off your debt and you don't have to refund them, you've got to pay tax on that. Employer contributions to insurance and/or medical schemes and medical costs incurred by the employer. The full contribution made by the employer on behalf of the employee, and this needs to be treated as a taxable fringe benefit. Please note, this is medical aid, pension or provident fund, and disability. But we have an exception. The exception is where the employer pays for an injury on duty medical bill. Such an ad hoc medical expense will instead be recovered by the employer from the Workmen's Compensation Fund, which is covered under the Compensation for Occupational Injuries and Diseases Act. I'm sure you all agree that the medical aid and pension should be considered standard as part of the employee's remuneration and not seen as a benefit, but I suppose we'll get there one day. And our last one is bursaries. Bursaries paid to children and staff. When the bursary scheme is in accordance with the regulations contained in the SARS rules, then no taxable fringe benefit applies. If you are considering offering your staff bursaries or already do, this is a good way to help them without it negatively affecting the employee by generating a taxable benefit. And that's all we have in today's presentation. There will be follow-up discussions going into detail with some of the benefits mentioned today. Watch out for those invitations. Thanks very much.